100 points, but we're talking about the FMCG space now. Owing to the continuous rise that we've seen in input costs, there's been a series of price hikes from a lot of players, but importantly, because of these price hikes and inflation, we've also seen a slowdown in consumer sentiment. We've had HUL speak about that, we've had Marico speak about that, and that is more pronounced in the rural side of the country. And in fact, talking about that, we understand that Parle itself, our favorite biscuit, is looking at a 5 to 7% price hike this quarter. So to discuss this and the space as a whole, we are joined by Mayank Shah, who's the senior category head at Parle Products, and also joining us is Abneesh Roy from Edelweiss. Mayank, thank you for joining in, and Abneesh too. But coming to you, Mayank, first, how's rural offtake been for you? Have you seen a slowdown? How much does that account for in your overall revenues? And this 5 to 7% price hike, is this over and above the 5% that you've taken already?
Yeah, so I'll answer that in two parts. Firstly, on the rural slowdown, I would say slowdown would be, I think, a little extreme word to use there. It's more about tapering of growth. And I think we need to look at it in light of the kind of growth that rural saw in last year. Last year, if we talk about rural was the one which managed, to keep FMCG, especially rural food. That was the category which was able to keep FMCG in positive territory in growth, although 2 or 3% of the total market, but it was primarily driven by the rural growth, especially in foods. So on a very large base and a very large growth base of last year, we are looking at, what is happening in this year. Even if you look at the current growth rates, the rural growth rate is about 5 to 6%. I'm talking about FMCG, whereas food is about 7 to 8%. Which is definitely less compared to last year, which was 15 to 17% in food, and overall it was 8 to 9%. But I think we need to look at it in light of the kind of growth it saw in last year. If we talk about the better growth rate in urban, that's because of the kind of missed potential that they had, or much.
No, we take that point, Mayank. We take that point. But for you as a company, how much does rural account as a proportion of total sales? And on the price hikes, what's the kind of price hikes you've taken already, and what's announced for the third quarter?
Right. So, our almost about 50% of our contribution comes from rural, unlike broader FMCG market, where almost about 60% contribution comes from urban. So, and 40% only from rural. We have almost about 50% of our top line coming in from rural. As far as price hikes are concerned, this is the second price hike that has been taken after last year. Typically what happens is, when you see, normally it is very unusual to see increase in input cost across the board. And that's something that we've seen in last 6 months to 1 year, where not just edible oils, but even wheat flour and sugar, everything has gone up. Along with that, because of crude packaging material and because of paper, secondary packaging material, the prices of the same have also gone up significantly. Edible oil has gone up to the tune of almost about 50 to 60% compared to corresponding period last year. Sugar and wheat are up by almost about 10 to 12%. And if we talk about packaging material, it's up by more than 20%. Now, in a scenario like that, it becomes really difficult for any company to pass on that kind of price hike to consumer in one go. And that typically is the reason why most companies, they stagger the price hikes. So we took a price hike of about 5 to 7% in last quarter, beginning of last quarter. And again, this quarter, there is a price hike which has been planned of about 5 to 7%.
All right. So with that 5 to 7% plus the other 5 to 7% that you're planning, how much of the input cost pressure would be passed on, or will all of it be passed on?
No, I think we still would be able to only pass on about 60 to 65%, 2/3 of the increase in input cost. I think if we continue seeing the kind of raw material prices which are prevailing right now, there might be further price hikes. Although we expect prices to taper or input costs to go down, because currently they're significantly high, and these are commodities, they're cyclic. So in the coming year, we expect the prices to go down, especially in the second quarter of calendar year. That is the first quarter of financial year 20 to 23.
Okay, that's interesting. We have Abneesh Roy, who tracks the sector very closely. I think he's been tracking it for years now. Abneesh, good morning. I was going through your report where you talk about how rural slowdown will be a key issue because of inflation hurting consumer sentiment, an uneven monsoon, a delay in winter, and grammage cuts. Tell us a little bit about how this could impact businesses, because that's the feedback that we're getting as well, that this 2-year-long COVID situation has hit rural markets in a big way. But which are the stocks that could get hurt the most?
Yes, this time definitely we expect the rural volume growth to be negative for many companies in December quarter and possibly even March quarter. So there are multiple reasons for that. Of course, urban remittance also is impacted. Although a lot of the reverse migration which had happened to rural area last year, they have come back. But if you see now again, because of the Omicron, we will see the hotel sector, hospitality sector, restaurants again do salary cuts and job losses will happen. And this will be happening in other sectors also. So urban remittance clearly is impacted. Also, if you see NREGS job demand, that is one of the highest. Now, NREGS job is of last resort. So if there is a very good demand, that in fact shows there is a problem. And if you see other high frequency data in terms of tractor, etc., also there is an issue. Grammage cut has a straight impact. So yes, I would expect companies which are small, for example, Bajaj Consumer or say even Colgate, etc., they will suffer more. Bigger companies like Hindustan Unilever and Dabur have got a more diversified portfolio, so they can cross-subsidize. They have got higher urban also, plus discretionary is coming back. So for Hindustan Unilever, discretionary will finally see growth even on a 2-year basis, which is going to drive margins also. So Hindustan Unilever, we expect EBITDA margins to expand quarter on quarter and YOY, but most other companies will see EBITDA margin compression because of rural slowdown and because of the inflationary pressure. I expect Q4 also to get impacted in terms of rural slowdown. But if you see, is this structural? I don't think anyone is calling it structural currently, as Mayank also highlighted. Most probably in FY23, if commodity is correct, we'll see the grammage cuts, etc., reverse and price cuts also happening in FMCG. Plus, government has cut the diesel prices, etc. Inflation is also down. So FY23 could be a good margin expansion year, and possibly the rural growth will also come back in FY23.
Take your point, Abneesh. But Mayank, you were saying that if commodity price inflation continues, you will have to take another price hike. I'm wondering whether you guys hedge against this commodity inflation or not, because Britannia has been doing that for a while and they've announced a structured price hike for the entire year. First quarter was 1%, second quarter 4%, third quarter 7.5%. By the end of the fourth quarter, it will be 10%, and that is taking into account the hedging that they've done. Do you not do that? And on price hike itself, how much of that comes from shrinkage and how much of that actually comes from MRP?
Yeah, so we do. So there are forward contracts and there is hedging that happens, in major input materials. So especially, wheat and edible oil. So that's where, we get into those things. But it becomes really difficult for, given the volumes that we have compared to many other players, our volumes are sizably higher. It becomes difficult for us to cover entire, requirement as a 100% requirement.
So what's the rough hedge cover?
Sorry?
What's the rough hedge cover? What proportion of your commodities are hedged? How much is not?
Roughly about 60 to 65%. So two-thirds of, our commodities are typically hedged. It becomes really difficult given our volumes to hedge, 100%, as I shared earlier. So that's one thing. Secondly, I think when we talk about, how to pass on, or rather how to take price hikes, typically when you talk about smaller SKUs, low unit packs available at below 10 rupees and below, price point becomes very important. That's the reason why you normally take a grammage cut there, or a reduction in weight is there. Whereas in bigger packs, you normally take a price hike. If we talk about the total market, roughly about, 55 to 60% of the packs which are sold, and in terms of volume, almost about 40% of the volumes come from small packs. And that's where you typically see reduction in weight, whereas the balance 40% packs are where you will typically see the price hike.
Okay, all right. Mayank, it's breakfast time, and I remember us chatting earlier, you were saying that the breakfast cereal market has tremendous potential, and you're looking at getting around 7 to 8% of that market. Have you made that move towards that? I mean, what's the progress out there? And also give us a sense in terms of what's your market share? If you compare us, compare Parle with the different other brands like Britannia and the likes. Go ahead.
Yeah. So in terms of breakfast cereals, we recently got into it about just 2 months, 2.5, 3 months back, and we right now, as we talk about them, launching them in a phased manner across India. We are still to cover entire India, and with very limited geographies, we have been able to garner at least about 3 to 4% share in the total breakfast cereal market. We are very upbeat about this particular segment, given the acceptance of the same and given the way kids have taken to it. So, if we talk about offering as well, I think we have a very differentiated offering. We are not into regular cereals. We are into encapsulated or rather form cereals where you have the filling in it, filled cereals, and that's something that appeals kids. We've seen
Okay,
good amount of growth coming in there.
we'll talk about that as we get that in our stores, and then we'll have it and then give you a feedback on that, Mayank. But just tell us the third quarter. What was the volume growth like for you and the industry? Did you gain market share?
Yeah, we have been growing at lower double digits in the third quarter, and we continue to gain market share, which we started about 2.5 years back. We've been steadily gaining market share.
Okay, steadily gaining market share. All the best. Let's talk about the stocks then, Abneesh. If you look at the last 1 year, from a 1 year perspective, stocks like Britannia, Pidilite, Asian Paints, Bajaj Consumers have all been laggards compared to the rest of the pack. Do you see any of them start to outperform now? And what is your pick of the pack over the next, say, 1 year?
Yeah, I think clearly we see consumer names coming back in flavor. Last year, there were 2-3 issues. One was, of course, global liquidity, which was extremely high at multi-year high, multi-decade high, possibly. When that happens, you don't see consumer staples do well because then it goes to the high beta names. Now, for example, taper is happening and taper will accelerate by the US government, etc. So that I think will lead to lower global liquidity. You see commodity inflation also, we have seen crude, tea prices, palm oil prices, they are coming off from the peak. But there is an expectation that these are extremely high prices. Mayank also alluded to that. These are cyclical commodities. So that will also lead to margin expansion in FY23 for most companies. And Unilever is already showing that ad spends are also being cut. So let us see that also, that ad intensity by the FMCG companies is definitely coming down. So that's also going to support. So yes, I do see Asian Paints, Hindustan Unilever, Dabur, Godrej Consumer and Nestle doing well from a 3-6 months and 1 year perspective also. And definitely we would see a better year versus last year for these stocks.
Okay, we'll see a better year versus last year. Well, gentlemen, thanks a lot for joining us and all the best for the year to come. The market, by the way, is still under a lot of pressure. In fact, it's gotten worse since the last time we took a check. The Nifty is now down over 216 points and the Bank Nifty is inching